Good morning and welcome to another session of weekly review of Indian equity markets. So this was a week that saw quite a bit of volatility and sharp correction in the market. So on the charts, what we see is a Nifty chart. Now, as you can see, for the week, Nifty is corrected by close to 2.5% or little more than 2.5%. You see an element of tail which is formed right at the previous breakout zone. Uh, this should act as a good support, but the way we have started correcting, is there a possibility that we will breach this and head lower? The answer is, or the probability is fairly high. Uh, so, so what essentially can happen is this was the first line of, so this was our first line of defense, which got broken easily, and we trended down. And look at the way support has come right at the level that we thought, that we suggested that it could be a strong line of defense. Now that we have tested 18,800, what is the possibility, or how do we play out this market, given that we are very close to a festive season, sentiment around festive season? So, so what essentially can happen is we may rotate here for some time before the next down leg can reappear in the market. But clearly, there is a high probability that we are trending down rather than trending up from here. Also, there is a elections have been declared across five major states, and also central election is 6 months down the line. So we'll definitely see some bit of volatility. And if you've seen the data, there is a aggressive selling happening across happening from FIS, which to a certain extent is being matched by DIS. For example, a couple of days back when we saw a sharp dip in the market, FIS were net sellers to the tune of 7,500 crores, whereas DIS came back and they they punched in close to 6,000 crores of capital, which is a very good sign. But having said that, uh, as we had suggested last week, or as we thought last week, that if the trend in the mother market, which is US market, is down, and if there's selling happening across the board across global indices, there's it's difficult for Indian indices to uh, go the other way. Just to let you know, strong we have been strong outperformers over many months and maybe a couple of years now. So the possibility that we may remain decoupled and continue to have uptrending move uh, goes down. The probability of that is low, and that is what we have started seeing now. This week's action on a daily basis, if you see, so here we are now well below 50 DMA and with a sharp cut. So what essentially can happen is, over next few weeks, we may rotate here, try to make some up move, as this is the first element of downward move which has come into the market. So the 50 DMA can trend downwards like this. We may test 50 DMA a couple of times, something like this, and do something like this. So this is a probability scenario that so 50 DMA continue to trend lower, or maybe let's convert this into a trend line. Take this out. This is the downward sloping trend line that we are talking about, and we may continue to trend lower. If you see, we are still at 18,500, right? If this trend line were to be respected, so there's no major, something like this by end of January. 19,500. Does it come somewhere closer to the support and resistance level? Yeah, this is where there is a there's a possibility and probability that we may. So this is a possibility that can play out. It's a high probability scenario that I think of. Uh, at least if I were to look at multiple factors across various indices, this is a possibility that we can think of. Let's look at Bank Nifty, which has been the leader in the up move and the leader in the down move. So 2.15%, clearly below 50 week moving average. Let's convert this into 200 day moving average, which is 40 week. Has it? Let's do one thing. Let's look at this on daily charts. Okay, so last week when we closed, we were, I think, just about there as far as 50 DMA is concerned. So this was the first till last week. This was last week's closing. We were just about closer to 50 DMA, but look at the and also this range which was forming and which was a critical range, and then we just dropped vertically. And though Friday's closing session was a small candle with a definite, positive close, opening and positive close, but I don't think there is a reason to read too much into this candle. The trend is definitely southwards. Do we? And let's look at this is so somewhere here we started underperforming Nifty. End of May is where we started underperforming Nifty, and look at the pace at which we have been underperforming Nifty, which essentially means that Bank Nifty has given up its leadership fairly early in this rally, and then it just trended southwards, whereas other indices took over. And now there is some element of outperformance when it comes to Nifty, but I there is no reason to get overexcited about this. We are nowhere closer to having the stability that one needs to have to for the next leg of up move. I think this would be an interesting place to watch out for in terms of how things pan out from here. Uh, Coming back to Nifty, uh, one data point that I have seen, obviously, with the way Nifty has has reacted, has corrected from 20,000 levels. I think we have now given up close to 6.5% from the top. 20,200 was the top, and we have given, yeah, we are okay. So with Friday's closing, we are close to 6% uh, from the top. There is a possible. So what is the possibility? Possibility is we may definitely have a 10% kind of correction that cannot be ruled out. Right. So remove all drawings. Yeah. So much clearer chart of Nifty. Now, one data point that I was talking about is that now close to 68% of the Nifty stocks are below their 50-day moving average, and 32% of the stocks are below their 200-day moving average. Now, both these signals are fairly important, and important signals purely because when such correction happens and stocks and indices spend time below 50 DMA, it is a signal that the overall health of the market will continue to deteriorate rather than improve in a hurry. So it's like a viral which has started taking over, and it started infecting. So it is going to get worse before it gets better. Let's look at some other indices which are key components of the market. So FMCG has made a good move, has was forming a nice range uh, on a daily candle. Now, actually, when we were reading FMCG and we were talking that FMCG is positive, this was the range that we were working with. Now we have reached the range, but having said that, this week's long tail is a good signal. It gives some sense of relief given the way it has closed and on daily basis as well. If you see, so so the range of candle is not as bad as what you have seen in case of Nifty or Bank Nifty. Let's compare Nifty. You see the way Nifty is just collapsed. I'm not saying FMCG is not corrected, but the way candles appear in Nifty versus FMCG are very different. Look at the top and bottom for the week, 3.5% correction. Let's see FMCG. This is 2.5%. While it may not seem to be a lot of a big number to work with and stuff like that, but it's definitely look at the RS. It's now started trending higher. So, so FMCG, in my view, is definitely not on a weak wicket as much as other indices are concerned. Let's look at pharma and IT, which will essentially say that we started looking at defensives first. Now, this is Monday opening, and this is we formed two positive candles as compared to one candle in case of Nifty and Bank Nifty, and obviously the range of the candles are not as bad. Range of the candle is definitely better when you compare it with other indices. Let's look at pharma once. So pharma is again not as good as say FMCG or IT, but it's definitely it's definitely within this flag structure and the correction. Actually, in case of pharma, the correction was deeper, but it's definitely not. So for the time being, let's keep aside pharma, but FMCG and IT were definitely in positive zone, or much better structure as compared to Nifty and Bank Nifty. Let's look at few other important components of the market. Let's look at metal, which is another high beta. You see the drop. The, the drop is vertical and much sharper. It's close to 6.5% kind of number. Sorry, and let me just. This was Monday. This was Friday. This is Monday. May not be 6%, but it is definitely it's deeper than Nifty and Bank Nifty. Let's look at auto reality, which was doing extremely well in this phase of the market, has seen major, has seen definite correction. But look at the long tail. But reality as an index, one has to be careful because the components are fairly volatile in this set of stocks. So it's best to be You can't chase everything whenever they show some bit of positivity. No, look at auto. The way autos have reacted back and corrected back is phenomenal. So I think auto is one sector which is holding its ground firm and not wanting to let go so easily. I think this should be definitely in our radar and see opportunities coming up in this sector in this cycle as well. Or maybe when this correction plays out, auto may correct, take support somewhere here, and then again begin its up move. So that's something that can play out as far as auto is concerned. Let's look at now. This is a sharp correction. Now this is a sharp vertical correction, and it has given up all possible support. So this was a breakout zone. It went up from this breakout zone, but it just corrected from here. But when you look at RS, there's nothing wrong with RS. It's just showing that it's contracting in this range and it may take out. But there is no reason to get excited, no reason to build position here, because we are in an overstretched market. And this correction, if we do not see a magical up move in the coming week, then we are definitely heading lower. Now let's look at small cap. Now small cap is one place where we suggested extreme amount of caution, to the extent that I had clearly mentioned that I had booked out of my micro cap position. Look at this candle. This is a 3.5% plus candle, 3.8% candle. This is 7.5% correction. What is this? The money is coming back into these stocks, but there will be stocks which will continue to see deep correction. So when you transition this into what has happened for the week, we've closed 3% lower. But look at the deep correction that we are seeing in this market. So this is not a great sign. And similarly, in case of microcap, the correction was as deep as 10%. And if you remember last week, I spoke about the fact that I had booked out of my microcap position, and I also categorically made a statement saying that, and maybe fact that I said if another candle like this prints, the pain that can emanate is huge. And see, this candle is like 5% candle. So on my position, if I had not booked out, leave everything. It was not about the kind of money that I would have lost. Obviously, that is also uh, not something that I should have done. But having thought that markets are ripe and I should book out, if I had not booked out, I would not have been able to 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 be nice to myself, or not able to let go it so easily. It would have been very painful. So, and it impacts psychologically. There's a big impact. So that's the reason why you should be cautious and continue to think about market as to how can you protect your capital, rather than thinking of how can you make 30, 40, 50% in stocks that move up. This is broadly what you see as far as Nifty, the broader indices are concerned. In case of Indian indices, obviously we are in a result season, and there are certain stocks whose results are good within these sectors which are giving up. For example, let me put across a couple of examples for you. Let's look at Axis Bank. Axis Bank, after the result, has come back strongly. The results were strong. The weekly closing of Axis Bank is actually positive. Compare this with the large cap stock like HDFC Bank, which has been a problem child. Weekly closing is minus 3.5%. ICICI is negative as well, minus 3%. Indus is another stock which is definitely doing good things. Yeah, Indus though is not positive, but it's you look at the way stock has been contracting. Stock is pretty much there. It's not given up. And on the trend line, still 200-day moving average is still fairly positive and moving upwards. Whereas look at HDFC, well below 200 DMA. ICICI, I think should be close. Yeah, it's below 200 DMA now. So this is a let's look at another stock which is which has been doing exceptionally well. This is a strength. Look at what this stock is doing. It is in an exceptionally strong phase. Let's move to global indices. I would want to wrap up this in next 3 minutes. Let's look at global indices, what is happening, and few other factors. So let's look at Nasdaq, which has been the problem area. Nasdaq for the week has closed negative 2.6%, and it has reached the support it was taking for last couple of weeks or last few months, and well below. And look at the volume pickup. So unless we see stability coming back in few of these indices, I don't think we will have a good outing in India as well. Similarly, let's look at S&P. Strong downward trending candles. Dow. See, there are no pockets of strength in this market, both domestic and global. This was one of the strongest indices, Nikkei, which is also started trending down for last couple of weeks. Now, why do you want to risk in this market when the overall environment is negative? Look at the way oil is consolidating after a up move. Uh, Look at gold. Gold has broken out. Gold has broken out. This chart is courtesies one of the legends of the market. So I am not responsible, or I am not the one who spotted this. It's the legendary investor who spotted. So I'm just mimicking what he he has shown. And look at so what essentially is leading factor is that interest rates are moving up. So US, this is where the pain is coming from. Look at the way interest rates just is heading upwards, and it's gaining strength and momentum on a daily basis. So this is something which is causing pain across market. This is single most important reason for the pain in the market, which is US inflation that we've been talking about for a while. Unless this cools off, US market is not likely to begin its rally. There is a possibility that we may bottom out. We may peak here and bottom out in US sometime soon. But unless there's a clear indication and established trend, there is no reason to run. And possibly we'll see that next week if the trend does not come back by then. Last week we said that Tesla, after the results dropped sharply, and we continue to see that correction. We had results of Alphabet this week, and not great. Microsoft, not look at the Look at the way correction happened. Look at the way this is a weak candle. So across pockets, leadership stocks are showing weakness. There is no reason to hurry up in this market and try and start building positions in this market. We are not in great shape. I would definitely recommend that any bounce back, which can happen, and like what you have seen in mid and micro cap or small cap, that we corrected by close to 7-8%, and then we are up 3% from there, which is which may lead a lot of people to say that this is a buy on dip opportunity. People would have jumped to buy some stocks which have corrected 18-20%. This is not a market to buy. This is a market to be cautious and maybe continue to cut positions wherever the opportunities arise. So with that, let me wrap up this session because I have to catch up on something. Uh, and before I end this session, let me give you my standard disclaimer. Uh, I'm not a SEBI registered investment advisor. I'm not a investment expert. None of the stocks, charts, or indices that I have shown here are an invitation to buy or sell or build positions of any matter or any factor. I'm doing this for my own weekly review, and in the process, I'm recording this to keep my thinking hat uh, or review my thought process as we go ahead, because what I thought last week is something which I may not 100% recollect, and this is a great medium to gather your thoughts and record and journal your thoughts. With that, have a great day, have a great week ahead. We have a match coming up today, so enjoy the match. Thank you so much.